Playbook. As always, you have your co-hosts Deshaun and Cornell. And as we get more into this world of technology, we are realizing that financial advisors are not the only people that can advise your money. There has been a rise in what people call robo-advisors. All right. Robo-advisors essentially they're essentially AI that can take your money and invest it for you. Okay. Long gone are the days where you have to do the investing yourself or pay an advisor or another human to invest your money for you. Now you can let the robots do it. So in this episode, we're going to dive deep into what robo advising is. Do we think it is an advisable way to invest your money? And yeah, kind of some facts about what robo advising is, the pros, the cons, all that, man. So, Cornell, first question I gotta ask you, bro, is have you heard about robo advising?
I actually I haven't heard about it. I don't hear about it very often, but for some reason, whenever I go to Invest Fest, they're like, "Hey, we created this system that can get you this amount of gains," and I even hear about them trading options, bro. And my thing is, if it, I don't know, in my head, I'm like, if it's that easy, like you trading options and it hits with 99% accuracy, like it's basically an ATM. You can just get money whenever you want.
Why
So
aren't you a millionaire right by now? You know what I mean?
why are you not a gazillionaire? Like if I can just do it, why not just put all your money in there since it's so accurate
Yeah.
and,
Nah,
and then let it do its thing?
I feel you with that, man, because I've definitely seen that not even just with options, but with trading futures too, right? Like the idea of letting the algorithm plan the trade for you. Now, of course, robo investing is a little different um, because it's more of a long term strategy, not where to purchase and where to sell and put your stop loss and all that. It's more of it asks you certain questions, right? It gives you like a quiz. You say how aggressive. Well, you give them your age. You tell them when you plan to retire. You tell them how much money you plan on starting with your investment, how much money you're going to invest every month, and how soon you plan on retiring, and how aggressive you want that investment to be. And from there, they create this package for you, right? Where they say, well, if you want to retire at this age, we're going to put 60% of your money into domestic stocks. We're going to put 25% into international stocks, and we'll put 15% into bonds just so you can have some long term stable growth. And that I think is kind of the basis of what robo investing is, right? It takes your information, takes the answers that you give it, and then it creates a a portfolio for you. And they base it on something called modern portfolio theory. And that's how they allocate their assets, right? Like they basically say, based on the investor who is investing in this way and what their portfolio looks like, we're going to pick these assets for you. And I think it's very interesting because it reminds me of like back in the day when we were using Acorn and Stash and things like that. But we had talked about that, and you were like, that's not exactly the same. Those are like prepackaged. That's like buying a TV dinner. You know what I mean? Like the Acorn and the Stash, because that doesn't change. Um, but I think what robo advisors think the idea behind that is they reallocate, right? Just like how a regular advisor would take your money based on how the market is doing, it changes strategies, right?
Right.
So, like you said, you don't know anyone that's done any robo investing yet, right? Or have used a robo advisor.
I personally do not, but I can see how it could be attractive to people who do not feel like figuring out how to maneuver the stock market themselves.
Hmm.
And my thing is, I would rather someone do that than do nothing. Just like how I would a regular advisor.
Yeah.
Is it better than having a regular advisor? I'm not sure. But my thing is, at least you're doing something.
Yes.
My goal is to have as many people doing it themselves as possible, because it's not hard, it's not difficult. But in that chance that I meet someone that is just dead to invest in themselves, yes, please get somebody to do it for you or something like AI.
Yeah. No, that I definitely understand. And then when you're comparing a robo advisor to like a financial advisor, I guess that's another question. Do you know anyone who has a financial advisor?
I do know people with financial advisors.
Okay.
Yes.
How have you talked to them about like their I guess their level of happiness with the financial advisor? Like, are they glad that they have a financial advisor? Do they think like, I mean, I don't know. Have you had that conversation at all with them or
For,
not really?
for sure. So like within my job, they bring Voya into there
Mm,
and they're financial advisors. So I always talk to them and talk to people that are doing it with them, and their returns aren't as much as say mine and yours, like who invest in single stocks,
right.
but they just like it not having to look at their stuff. And I'll look at their returns and I'll tell them, but it kind of goes over a lot of people's heads, especially when they're not ready to receive the information.
Yeah.
So
Yeah. And like you said, I think that having someone do the investing for you is better than not investing at all. Right.
right,
It's
right.
better than not investing at all. I think with robo advising, of course, you got your pros and your cons. One of the big pros, though, is when you're dealing with a financial advisor, a lot of times they charge you like a 1% fee. And 1% might not sound like a lot, but if you're talking about $1 million, $2 million a year, that's a chunk of your funds.
Even a 100,000, like
Yes.
to pay somebody $1,000 a year just to, and most times they're not managing stuff every year. They're not doing it. So some years they're just looking at your account
Yeah.
and they're making $1,000,
Yeah.
which is insane.
Once they set it up, it's like I mean, of course, they have to do their annual review with, the customer maybe, but like you said, it's possible that not much change happens. And to be honest, I think much change shouldn't happen. Like if you're getting into a market where you have to keep changing every year, that bless you, that might not even be the best market to be in. You know what I mean?
Oh, yeah.
Yeah. Like we talk about compound interest. If you're changing your asset allocation every year or every 2 years, I mean, the compound interest is already kind of being affected a little bit by constantly taking money out and buying this stock here, or taking this money out of there and putting it there. So, yeah, hopefully, if you do have a financial advisor, they have that conversation with you and you invest in things from the jump that will allow you to keep growing your money at a steady rate. But in the comparison to a financial advisor where you're paying 1%, a robo advisor, the charges can be as low as 0.25%. So that same robo advisor who is, going to kind of manage your funds is charging you almost 0.75% less than what a regular financial advisor would charge you, Um, so that of course is one of the pros. And
Right.
people are already saying that this robo advisor market is going upwards to like 8 billion by next year. You know what I mean? It's growing at a very steady rate.
But we also have to take into account that when I like how we were just looking at Fidelity Go, right? The
Hmm.
robo advisor for Fidelity.
Yeah.
Yeah, the robot is taking 0.25 or 0.35, but it's also putting you in index funds. And those have
Fees. Yeah.
fees also.
Yeah.
So is it really just the 0.25? Because I didn't see any single stocks when it came to the allocation for those robo advisors.
That's
And
true.
my thing is my experience with Acorns, there weren't any single stocks. It was all in compounded funds like
Yeah.
mutual funds and ETFs. So it's just something to that's something to think
Hidden,
about also.
hidden fees for sure. Yeah. I imagine that there are going to be some hidden fees that go along with using an advisor that is putting you in mutual funds. They're not going to pay for the the upkeep of the mutual fund, you are, right? You're going to pay that 0.25%. In addition to, you'll pay the fund manager their fee. You know what I mean? So if robo-advising is something that you decide to do or decide to go down or learn more about, just make sure you know how much money you're paying for this service, right? You talked about Fidelity Go just now. I think one of those, that is a specific, that specific account is you pay nothing, at least in fees. You pay nothing to for the robo advisor fee until your account reaches $25,000.
Mm-hmm.
But that does not include, the mutual fund fees or any other fees that go towards what you're investing in. But the actual robo advisor does not charge you until your account reaches 25,000. So yeah, I think that is another perk, right? Like you're making money off of someone else advising your account for the most part, not including the hidden fees that you got to watch out for. So yeah, but I think some of the downsides are like you just said. How aggressive can an actual robo advisor be? Because we tried to make it as aggressive as possible on
The
Fidelity Go.
most, the most
Like
aggressive.
we tried to make it the most aggressive as possible. And the most aggressive was 70% domestic stocks, 30% international stocks. But all those were funds or ETFs or mutual funds, no single stocks. So that already tells you a robo advisor is not going to be as aggressive as buying Nvidia or Microsoft for you. It's not
Right.
going to do that. You know what I mean?
Right.
Yeah, it's going to put you at a point to where it can still make you some decent gains, but you're not going to see any like single stock, that type of growth. You won't see that with a robo advisor. But I think that's the trade off, right? For people who don't want to look at the stock market every day, they would love to see those single stock gains, but I feel like that's the reason why mutual funds exist, is for people who don't want to put all their eggs in one basket per se. So yeah, I think again, just pros and cons to it all, man. If you are looking to go super aggressive, robo investing probably is not the route you want to take. But I think to what you just said earlier, if it is a way to get you started, look into it. You know what I
For
mean?
sure.
Yeah,
Yeah. And my
yeah,
thing is, uh, even if you want to do that temporarily until you find out how you want to do it yourself, that's a good move too. Just don't get stuck letting other people or things manage your money. Because one thing that I found out personally is you're always going to do better. You're always going to care about your money more than anyone else. Because yeah, as Deshaun and I stated in earlier episodes, when we first started, a financial advisor told us to get into a target date fund, and we weren't making a lot of money. Um, but what we did is we looked into it ourselves, and ever since then, we've made a lot more than we would have made in that target date fund. So always advocate for yourself, your money, because it's going to affect how successful you are in the long run.
definitely. Yeah. And man, I couldn't have said it better myself, bro. Like, however you get started, whether it's through robo advising, getting a financial advisor, doing it yourself and getting bruised up and figuring it out, we want you to just get started. We want you to get off the sidelines. And this, of course, is just another way, another avenue, really another definition of how easy it is to start investing in the stock market. Now you don't even have to think about what to invest in, because people always say, where should I put my money? Just try it out. See what the robot does. See where AI puts your money after you tell them how aggressive or not aggressive you want your money to be, and see what happens. The worst that can happen is that, well, I don't even know. I feel like you putting your money into an asset that has a potential to grow is all positive. Like the most you'll do is learn whether or not after a year this is not aggressive enough, then just pivot. Course correct.
Yep.
Um, but yeah, yeah, man. I just wanted to dive into this whole idea of robo investing because I feel like it is part of the AI conversation. I don't know if they're going to get smarter, if robo investing is going, I mean, yeah, it's definitely gonna
Got
become
to. It
more
has to. Because as technology advances, like, why wouldn't. But my thing is, everybody can't be rich. That's why I'm just trying to figure out, like, where this is going. Because everybody's not going to get rich. It just, our society is not meant for that.
It's
We
not. I
have,
don't think the
we,
world is meant for like it sounds negative to say, but that's kind of just what it is. Like that's the reality. Yeah, but I
yeah,
don't know.
but it's real. Because you got to have, my thing is, and I said, because, I meet people, communists, stuff like that. And, I understand that their heart is in a good place.
Hmm.
But my thing is, I guess I don't have that much faith in people. Like, if people didn't have, hold on, I got, you feel me? If people did not have an incentive to work, a lot of people would not work.
Yeah,
Like,
people.
who's, yeah, we got to have our garbage men. We have to have our fast food workers. We have to have, all of these are important positions for our society to run, our communities to run. We just need them. And I don't know a whole lot of people that's gonna come fix my HVAC just for the hell of it.
Yeah, probably not a lot of people that would do.
Like,
Even the person that's gonna make my dinner just for the hell. You know what I mean? I go to a restaurant and they're like, "Here you go." Like, I'm paying you for that. You know?
all right, what's the incentive?
Yeah. So you're saying that though investing exists, though there is a potential for people to make a lot of money, the reality is a lot of people are going to be and remain in that not even really the mindset of um, not getting rich. Just most people won't take advantage of this opportunity. They they'll
And,
see.
and
Go
even
ahead.
if miraculously everybody was like, okay, I'm finna lock in. America doesn't work that way. We have to have people on the bottom.
Yeah,
It sucks to say, but it's the truth. It's the only way. It's the only way that we can run.
yeah. There has to be people to do the things that not well. I mean, as I
Yeah,
say it, it sounds bad,
yeah.
but there has
It's
to
the
be
truth,
a group of people who will do the thing that not everybody wants to do, right?
right?
Yeah. So, yeah, until they come out with widespread robots that do garbage and do fast food and the, you know what I
I feel
mean?
like that would make it even worse for the people that are not. Oh, but I see what you're saying. But then maybe it'll put people in a position where, hey, we don't need these people.
Yes. Yeah. And I mean, I already seen, I keep getting ads about this company who is reinventing the fast food industry by having this robot arm fry fries and flip
So,
burgers and
so, so let me ask you something. Is this
hmm
going to put those fast food workers in a better position, or is it going to leave them without a job and put them in a
I,
worse position?
I think a timeline will, it'll happen in stages. I think at first there will be a disbelief that it will replace everyone. Then, if it does replace everyone, there will be anger saying, I can't believe you're replacing my job. Then there'll be a stage where people will say, all right, well, I have to do something different. And that is where I think the change will happen.
You know what's funny?
Possibly. Mhm.
Because they're blaming immigrants for stealing jobs, and now they're creating robots to do the jobs that they're saying the immigrants are stealing.
It is actually kind of funny, bro, because it's just something I've been peeping for a long time. Like, even if you go back to when self checkout started, right? Like, that's taking someone's job, right?
Right.
Now there's like two or three cashiers at a time that's working. When before, bro, Kroger used to have like 20 lanes. Like what you there's like 20 numbers. You know what I mean? Like there are 20 numbers. And now you might see maybe four of them lit up, but then there are six at the self checkout. where people can go check their stuff out and just keep it pushing. So I don't know if that affected Walmart's, you know, numbers, or if they get let go of a lot of cashiers, or they made the cashiers like stock people. I don't know. But you see less cashiers and more self checkout lines, like that is more prominent. Um, and I don't know if it just spills over into affecting the individuals who work cashiers, or if the people who work cashiers are now working better jobs because they got let go. I don't know. You feel me? But
I feel you.
just like this robo investing, I wonder, will this ever take over financial advisors? You feel me? That would be wild.
That would be wild. But I can
That would
see
be
it be
wild.
possible because, of course, that'd be better for banks because then they don't have to give that cut
Hey,
to the
yeah.
financial advisor. They're taking out the middleman.
hmm If
Fintech
they can,
going crazy.
if they can make the robo advisor, the AI advisor, as smart or as reactive as a human advisor, that would be wild, bro. And it costs them a fraction. Well, really, the financial advisor gets that 1%. Like you said, the bank would just get that 0.25. So, and then what the robo advisor will do is have them invest in the mutual funds that are owned by the bank already. Like Fidelity Go, if you look at their allocations, it's all Fidelity mutual funds. You feel me? So
Mhm.
they get the 0.25 from Fidelity Go, and they get every single, fee that comes with you investing in a Fidelity. Man, this thing right here is gonna be interesting.
But nah, you're right. They can cut out the human advisor, or at least um decrease the amount of human advisors that they have, for
Yeah,
those.
they really need to do something with those free advisors, because that dude almost had us jacked up, bro. Like the one
Yeah.
who told us to get into that target date fund back in 2013, 14. Like, come on,
And
man.
I wonder why they push that on young people.
So no, I don't know.
Like what is the incentive for that?
It's blanket, bro. Like they tell everybody the same thing. And I feel like it's not just banks, it's also, well, no, it is, because even with your job, your
Yeah.
401k, your retirement, it's through some brokerage account. And if you talk to them, they'll be like, let me set you up with this target date fund. Like,
Yep. And it's
no.
automatic. It's
Oh
automatic.
yeah.
I haven't even talked to anybody. It just
You have
automatically
to
goes in
change
there.
it.
Yeah.
Yeah. That's crazy. Unless you change it, you will automatically be putting money into a target date fund, which, I mean, it moves as fast as a savings account. I'll give it the benefit of the doubt. It moves as fast as a high yield savings account. 3%, 4%, maybe. When the market is like, even just a normal S&P 500, just going back to when it started its existence in the 50s to now, the average is 10%. This
I
includes all
mean,
the years that go
I
ahead.
feel like now, when's the what? All right. Since you
No,
started
look,
investing,
yeah,
okay.
I feel you.
Have you
I'm just saying, like, if you took the S&P 500 and put it on a timeline from when it started to now, that is like 10% year over year, because you got to include the years that it went down. But I feel you, because lately the S&P 500 has blown that number out the water over and over again.
this year, so hold on, let me
It's already up like 27% this
I
year.
think it's 30, bro. Let me check. Spice. All right, for the
By
year.
the way, this is not something that a robo advisor would put you in.
31%
31%.
in the
31%.
past year. S&P 500.
Yeah.
S&P 500
Yeah.
for the past 5 years, 91%. Yeah, that ain't like, bro.
No, I get you.
And then people are still saying it's 10%. Like, at what point are we gonna stop saying 10%? Because is S&P and not you. I'm not saying
No,
you,
no, no.
but
It's growing. It's
that's what the
growing
internet
faster.
says.
It's growing faster than it grew back in the day, for sure. But I think because the true average of the S&P 500, including when it was barely moving between 57 and like 70 or 80, that is what brings it down to that 10%. But if you were to do the last 10 years, let's just say the last 10 years, in 2024, sorry, in 2014, I'm looking at the QQQ, my bad. Let me see S&P.
Because I remember we've been saying 10% like since we started. You see what I'm
Mhm.
saying? So it's like, at what point is it not 10% anymore? Or are people just gonna keep going with that number? You know what I'm saying? I don't feel
Yeah,
like
no,
people are
remember, I get you.
I don't I don't feel like people are updating this number.
I think it's going to start updating once as we see more gains like this. Unless there is some big downturn that happens in the next couple years, the 10% is going to start increasing to 11, then 12. But let's just even look at the last 10 years. 10 years ago, the S&P 500 was at $2,000. So that's 200% in 10 years. Am I doing my math right? Yeah. Yeah, 200%. It was at $2,000 and then went up
It's at
$4,000.
6,000. Oh yeah.
Yeah, that's like 200% in 10
Yeah,
years.
dude.
But if you go further back than that, like from 2014 to 2004, it went up 100% because it was roughly 1,000 and some change. So
Yeah.
in the past 10 years, it went up 200%. But the 10 years before that, it went up 100%. And then the 10 years before that, it went up like, what is that, another 100%? So it's getting bigger, bro. Like the amount that you're seeing year over year is increasing, and that 10% is gonna start increasing. Yeah, I mean, if it keeps moving the way it's moving, because as you know, this is the top 500 stocks, and the top 500 stocks have been going crazy lately.
Yeah.
All these tech stocks have been booming. So yeah, I mean, we say all this to say, regardless of how you start, whether it's just dollar cost averaging into the S&P 500, buying some single stocks, or setting it and forgetting by letting a robo-advisor invest for you, which is not a terrible idea, right? Because even with that Fidelity Go, most aggressive, in a year's time, that particular allocation grew 22%, which is not bad. You know what I mean? For a robo-advisor, for you to just put it in and have money going into it and never looking at it. I mean, it didn't beat the S&P 500, but it diversified your portfolio, which S&P already does that. But you get what I'm saying. Like it's another way to invest your money. And I think the thing that the robo advisor would do that the S&P 500 would not do is do a reallocation. I don't know how often it would do it, but that's the point of an advisor. Go ahead.
But the S&P does
That's true.
reallocate.
It does. How can it lose? Now that I think about it, unless the stock market as a whole goes down, because
I don't, I don't think S&P 500 can. Oh, you talking about in 1 year, not
well,
in.
yeah, the whole market has to go down for the S&P 500 to lose. Because if it just moves based on the top 10 are the top 10 for a reason, you know? I mean, top 500.
Top
The top
500.
500 are the top 500 for a reason.
All
So,
right. That's why it's ready to go up.
yeah. But, well, um, robo investing, bro. Robo advisors. Like them, love them. I don't know. If it's something that you want to try out, I think it's good to look into it. Make sure that you are understanding the fees that go along with it, and just like with any investment, just make sure that you are also paying attention to it. No investment should ever be a set and forget forever, right? Go back and look at it. Make sure that it's moving in the direction that you are expecting it to go for you to reach your goals. And if you don't see it, moving as fast as you would like, then holler at us. We could teach you more about the S&P 500, teach you more about the Nasdaq, um, and show you some of the potential gains that could happen if you were to invest in these other platforms. So, but yeah, man, that's what we got
For,
for today.
for sure. And currently, right now, currently, right now, but we have a
Right
sale
now,
going on.
today. No, I'm just playing. Go
we
ahead.
we have a sale going on right now until Sunday,
Oh yeah,
December. What is that? What is Sunday?
December 2nd.
December 8th? Is that
No,
December 8th?
December 8th. Yep.
All right. Until December 8th, we have a deal. For $75, we'll get you started on your investment portfolio. We will explain mutual funds, ETFs, single stocks, the way they move. Um, and yeah, hit us up, man, for until Sunday, $75, and we'll change your life.
Yeah. Yep. 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 All that, man. So, as always, we appreciate you all tuning in. Hit us up on Instagram if you're interested in getting off the sidelines. Always hit that like button, hit that subscribe button, leave some comments, 5-star ratings, subscribe,
Share.
share with your friends. Join the Facebook group as well, talking about finances on a regular in that group. But yeah, we appreciate y'all as always. Till next week. Peace.
Peace.